Hello and welcome to Ask for a Trend. I'm Josh Lipton. For the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. It was a sliding start for stocks at the beginning of the trading week. Investors seem to have maybe lost their zest after Jackson Hole, and as they parse retail data and await NVIDIA earnings at the end of the session Monday, all major indices did end the day lower. And back to school may be a big indicator of how healthy the American consumer is doing. We're talking with the CEO of Tanger for a comprehensive look into the state of retail and the consumer. And companies are spending a fortune on artificial intelligence, but will that truly pay off for the firms and investors? We're speaking with an expert about a so-called AI bubble and what you need to know. Well, we've watched a wave of retail data roll in over the past 2 weeks, from consumer spending trends to back-to-school shopping. And join us now with a front row seat to the American shopper, we have Stephen Yalof, CEO of Tanger. Welcome, Steve, to the program. We're always looking for, Steve, for signs, lines of sight into the American consumer, how they're holding up, how healthy, how resilient they are. What are you seeing?
I think the consumer is resilient. You know, we're seeing traffic. If you go back to tariff announcements in early April, traffic's continued to build. So built in April, May, June, July, and didn't stop in August. We see cars in the parking lots in our shopping centers. We see people spending. And it's kind of interesting, sort of sounds a little contra to, to the storylines that are happening out there. But it's, especially in the value space where we have most of our shopping centers, that's where we're seeing the customer lean in a little bit more heavily.
And when we talk, Steve, about the American consumer, we often talk about like it's one consumer, but of course there's many. I mean, broadly, Steve, your outlets, your shopping centers, who are they catering to? What kind of consumer?
Well, it's interesting. They're looking at a whole swatch of consumer. Now, if you think about the consumer that's just looking for commodity at price, that's not really who shops in an outlet. The outlet consumer is looking for their favorite brands at the best possible price, and that's what we offer every day. So whether it's Nike or Gap or Coach or Kors or Kate Spade, it's brands that people are looking for. Our customer isn't looking for sneakers for the best price that they can get them at. But what's interesting about our product and our shopping centers these days is you see a whole bunch of different uses are popping up. So we're now seeing brands like Sephora and Ulta come into our space because that's where the customers are. So if these brands want to get their products out in front of the customer, they're going to find that outlet channel in order to open up new stores.
Let me ask you, in my house, my kid's first day at school was today, right? We did a bunch of shopping for that. Broadly, back to school, the season, how was it? How healthy?
Well, interesting. We decided to go with a promotion and say back to school started as early as June. Now, in some geographies, school wasn't even out yet. But in other geographies, the school started to get out. The tariff narrative was, Q3, Q4, maybe there'll be less product in stores. Maybe there'll be more expense associated with those products in the stores. So let's get the customer out shopping earlier. And it actually was a really good promotion for us. So we got the brands to buy in, we got the consumers in our centers earlier, and that's when we started to see traffic to build. And that traffic is continuing to build now. So we like this early back to school promotion that we ran in the value channel. So we were able to see a lot of customers bring their kids in early to buy and make sure they got the products they want at the best possible price.
Can you look at back to school, Steve, and kind of draw that out? Does that give you any line of sight to, what maybe the holiday shopping season could look like?
Well, back to school is the second biggest holiday for shopping of the year. Obviously second to the Christmas holiday. And what we did last year for the Christmas holiday is we started our promotion as early as November 1st. Halloween decorations come down and the Christmas decorations start going up. So we did a promotion last year where we brought holiday shopping further to November 1st, saying Black Friday happens every day in our shopping centers.
You mentioned tariffs, Steve. What's your sense of how, generally speaking, retailers seem to be navigating that dynamic? Are they eating that, Steve? Or are they passing it along to Steve and Josh, some mix of the two? What are you seeing?
Yeah, it's definitely a mix of the two. And we've seen brands start to push price as early as Q2 when there wasn't even a tariff impact to a lot of the products, but they were pushing pricing and testing the waters. Now, in the outlet channel, obviously everything's on sale every day. So if you push base price, you can still discount off that base price. So we saw a little bit of that happening.
You have a broad footprint there at Tanger. Are there any kind of interesting regional differences to call out in terms of what you're seeing at your outlets?
What's unique about the summer shopping season is that there's a level playing field. All of our centers are open air. You would say that the centers a little bit in the north on colder days and heavy snow days, probably shop a little bit more difficult, probably in the fall and closer to the winter months. But our shopping centers in the South, and we are a South-based company, those centers seem to be pretty active all year round.
Final question, Steve. I'm curious, you're running these outlets,
right,
but as we all know, a lot of people, they're doing, including myself, you're doing your shopping on your phone. What do you all do to get Josh Lipton off his phone, out of his house, into the outlet?
I am so glad you asked that question, because that's what we think about every single day. Right. And we're trying to think, what's going to differentiate us? How are we going to get you off the couch and into the shopping center?
It's not easy,
I
Steve.
just need your car in my parking lot, and I can keep you there. So it's, we're adding food, we're adding stores, but we're also adding entertainment, and we're adding loyalty. So if we can gamify the experience with a loyalty program that rewards you for your visit, we can give you a better food experience when you get there. The outlets have never been known for food, but now we've been able to add a much better food offering. We've got great retail stores, not only outlet stores that offer that everyday value, but also we have maybe some full price offering that brings categories in that you can't get anywhere else. More reasons to put your car in our parking lot, more reasons for you to stay longer, more reason for you to build a bigger basket when you're there. Hopefully tell your friends and come back and shop more frequently.
For me, good food would do it, just speaking for myself, Steve. That's enough. Thank you, sir. Appreciate it. Great seeing you.
Thanks for having me on.
U.S. stocks closing lower in today's trade, retreating from a powerful rally fueled by rate cut hopes. Here with the trading day takeaways is Yahoo Finance's Jared Blickery. Jared.
Thank you, Josh. I think we're seeing more rotation in the market. We have low liquidity. It's the end of August, end of summer, and money's just kind of sloshing around sideways to sideways. Some days you see some winners, some days you see those same sectors and stocks as losers, and we can see this here today. These are the 11 S&P 500 sectors along with the S&P 500 itself, and you'll see a couple winners today, energy and communication services. By the way, communication services, XLC, record closing high today. Haven't seen many of those recently, but look at who was the biggest losers today. Staples, healthcare, and utilities. Now, these three sectors in particular were the winners last Monday and I believe Tuesday. And so I was talking about rotation last week, and I think that's more of what we're seeing today. It's just going up and then it's going down, and we're seeing a lot of that here. If we take a look at my leaders, we're also seeing that. Mag 7, 1 week ago, those you couldn't touch those. Nobody wanted Mag 7. Then on Friday, things changed with Powell, and we'll get into more of Powell in a second because I do believe that's instrumental. But you take a look at what's happened with some of the other stuff that was leading last week. XHB, that's home builders, that was a leader to the downside today. And the list goes on. So I think it's just more rotation, and that explains a lot of what we're seeing, which really just appears to be random a lot of the time.
Stocks down. What was up?
Dollar dynamo. So I'm looking at the US dollar index, the Dixie in particular, and let me get a chart of that on the screen. So on Friday, Powell really shocked people. This is what happened in the dollar today. Let me give you a 3-day look so we can see last Friday. There's that big drop right there. What happened? Powell surprised everybody with a much more dovish statement about interest rates. Everybody now expects more cuts this year, September fully priced in. And so I think that caught people off guard. And so arguably, this is just a little bit of a walk back today. Even though that this is the greatest jump in the dollar we've seen in 6 weeks, it's coming off the biggest decline we've seen in the dollar since late April, so several months. And so maybe just a little bit of a snapback here.
Finally, let's check crypto. We should do a check. Last time I saw Bitcoin were around 110, I think, Jared?
Yeah, so Bitcoin breaking lower here, and we'll get a chart of crypto Bitcoin on the screen. And Ethereum, by the way, I've been tracking Ethereum closely, very close to record highs recently. It just barely backed off, but Bitcoin has seen a lot lower prices. So here we see Ethereum off 9%, Bitcoin off 2.72%, and these are over the last 24 hours. Let me put a 5-day chart in there, and we can see it just kind of steadily leaking lower over the weekend. And actually, I'm going to put a year to date. This will give us a better view. And here we had that, what I was calling a false breakout to the upside. Why false? Because it lured traders in, and then it just slammed the door shut. And all those new longs, especially the speculative ones, not the strong holders, the weak holders, they had to liquidate. And now we're seeing the lowest prices in what, 6-7 weeks, something like that. So It's not the end of the rally that I'm calling here, but I did flag a week or two ago MicroStrategy, that huge premium that we saw, which was leading Bitcoin to the upside, that had reversed, and so that was a warning flag. I'm not too excited about things right now, given the recent price action. I would like to have seen more continuation off of the excitement we had Friday. But you put it all together, the US dollar index was up today, and when you have the dollar up, you tend to see crypto and also commodities, they go down.
Let's end on commodities. What are we seeing there?
Let's do that. Futures. So when you see the dollar strong, you would think, okay, metals are going to be weak. That's exactly what happened. Palladium down 3%, platinum down 2%, silver down 1%, and gold's in there somewhere. Gold down about 0.25%. What's interesting is crude oil. Now, crude oil, it's not a perfect inverse relationship, but it did kind of perk up here. We've seen trading sideways for the last few months. And I think it is notable that we just had the highest price in a few weeks, but I'm not gonna get excited about crude oil here. It's another market. Futures, low liquidity into the September trading arena. I think that's what we're seeing here. Just low liquidity, low volumes overall.
There you go. Thank you, Jared.
Thank you.
Appreciate it. Investors eagerly wait to hear from NVIDIA this week as the AI darling gears up to report second quarter results. With over 2 years into the AI boom, Wall Street debating valuation concerns with the AI trade. For more on the state of the artificial intelligence market, let's get to Matt Calkins, the founder and CEO of Appian, a software company with AI at its core. Matt, it is good to see you as always. So let's dig right into the AI valuation debate, Matt. You see these numbers thrown around by OpenAI or an Anthropic. They make sense to you, Matt? They sound crazy to you? What do you think?
Yeah, people are talking about a bubble, but I don't think there's a bubble right now. I think when bubbles exist, it's because the value outstrips the price. But in this case, AI is just as valuable as everybody thinks it is. It just needs to be better applied. Back in the 2000 era, there was high valuations with no value underneath. AI is in fact extremely valuable. We just need to apply it correctly.
So what did you think when you heard Sam Altman of OpenAI fame? He suggested there was an AI bubble.
Yeah, he did. Well, look, he's using AI at a commercial level, right? And at a commercial level, funny thing is that's where a lot of the value is being seen. You look at that MIT report that came out a week ago, and what you'll see is that AI is failing when it's applied to enterprise situations. What we need to do is figure out how to get AI to be valuable. Now, I don't know whether Sam is right or what he's talking about, but I look at real AI applications. I see the use cases, I see the value created, and there's no doubt AI is incredibly valuable. We just need to be sure that everybody's using it correctly. Look, everyone in the world knows that AI is only as good as the data that you give to it. What they don't understand is that AI is also only as good as the work that you give to it. And we, as an economy, have applied AI to a bunch of silly side jobs instead of the core processes that make real value in big organizations. And once we learn to put AI in the right place, there won't be any question about a bubble because the value will be there.
You mentioned that MIT survey there, and just to put a point on it there, Matt, what it said was 95% of the organizations studied were getting zero return on their AI investment. I mean, that made a lot of headlines, that got a lot of attention, and for good reason. Well, what do you make of that? What explains that?
I think that was a really smart report, and I think that it needs to be read and taken seriously. I see it as one of a few warning signs right now about the state we're in enterprise AI. I would add to it the fact that AI has plateaued over the last year or so. ChatGPT 5 seen as a bit of a disappointment, that there is convergence between AI technologies, so all the models are performing roughly equivalently. Was it Robert Solow, the economist, said you could see the computer age everywhere, but in the productivity statistics. Well, the same thing is true right now for AI. You see it everywhere, but where's the productivity? And the MIT study really brought that out and showed us that we're using it in the wrong way. I think this is the end of the beginning. What we've got right now is the end of the beginning. It's the end of the period in the evolution of AI where you can talk about it merely for its potential alone. That's no longer okay. And these warning signs that are gathering around us and threatening us to think in bubble terms, they're really a signal that the beginning is over, that we need to move into a phase in which AI is evaluated according to the return on the investment that's being made. And $30 to $40 billion have been spent by major enterprises in AI projects. And as MIT points out, 95% of those are not showing a return. We need to reevaluate the way we're applying AI.
Let me get more specific, Matt. How are you all at your company? How are you leveraging AI?
Oh, well, we provide the missing link between AI and the workflows that allow you to apply AI to real work. All right. So AI is only as good as the work you apply it to, and it's time across our economy to put AI into play in real work, not the side jobs, but the real work. And that's exactly what we do. We apply it in the framework of a process or a workflow, and the MIT study talks a lot about how AI has got to be in workflows in order to be valuable. That's exactly what we do. We put AI into a workflow so that it can address the complicated actions that big corporations take that provide real value within the system. I'm talking about things that happen thousands of times a day, things that are handled by a complex interchange of people and machines working together in a coordinated fashion. AI today has not been a part of actions like that, but it needs to be. That's where AI can create the greatest value. And it happens to be that Appian software does coordinate AI into real work in that fashion. But that's what everybody needs to think about. Whatever their vehicle is for getting AI involved in real work, that's what everybody should be thinking about now.
Let me ask you, Matt, since I have you, I'm just curious, the macro tariffs, have you seen an impact there on your business? And in terms of, Matt, the time to get deals done, the size of deals?
Yeah, we have not seen impact from the tariffs. Now, I wouldn't have expected us to, right? Because we don't have a lot of inputs that are going to be tariff adjusted. So the only way that we would see an impact from them as a software firm was if the uncertainty or the burden were affecting our customers to the degree that they were canceling or delaying major decisions. And what we've got right now, we're riding a tiger. We're in a revolution right now where everybody wants to make value with AI. And the MIT study points this out. They say there's no reluctance. Everyone wants to bring AI to the point where it's creating value in their institution. And so we're actually doing fine. We had our best quarter in years last quarter. We're showing the momentum. We're charging more than 25% uplift to put AI into a process, and we're getting it. We're able to show the revenue and the margin from AI, and it has not slowed down as a result of the tariffs. But I think that's because there's just worldwide demand for this, and we're not under the gun for any tariffs directly.
Matt, always good to see you. Thank you for your time.
Thank you, Josh.
That's a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all the latest market moving stories affecting your wealth. Have a great night.